liquidity. So liquidity, yeah. Sorry. Let me just write this already. So liquidity, this is an important concept. So what liquidity simply means is just where others are, where people are looking to buy and sell. I'm very sure you guys that have moved from strategy to strategy, you guys have done something on support and resistance, something like this. That's why I say we should avoid the ranging markets. This is one reason. So when market is ranging, some people are looking to sell. People are looking to sell here. People are looking to sell here. And some people also are looking to buy here. So we call this resistance and support. This is not part of our strategy, but we need this. The resistance and support is not part of our strategy, but we need this as liquidity, and I'll tell you why. So now we don't know what price can do. Price can start going down from here. People that thought market is going to continue buying, going down from here and going down, causing big structure to the downside. And potentially too, price can go up from here. People that are looking to sell or get stopped out with their stop loss start going there, because their stop loss is going to be above this zone right here. So let me put stop loss as a red marker right here. So so we have something like this, market range. So stop loss is actually going to be here. Stop loss is actually going to be here, because people put their stop loss here and target maybe this support right here, because they expect price to bounce back. People will target this support here. People that are selling from here, and then they have their stop loss here, and people that are also buying from this support right here, they have their stop loss below here. Now this is what we call liquidity, where others are situated. Others are situated here, and they need to be filled. And price is generally going to either take both of them out or take one out. So we can expect price to do something like this, play out sellers and continue moving upward. Or what price could potentially do is get back to this resistance right here, clear it, you give a fake out, and then price will continue to sell down and target this low right here. So now both sides have been stopped out, and this is the point where we want to enter, because here we had a bit of structure, maybe we had imbalance somewhere here, price starting and go down and continue going down and continue dumping. So now let me just show you the structure I look out for, and when I see it, I take a trade. So we have types of liquidity. So types of liquidity, we have trend line liquidity, support and resistance liquidity. We have inducement. I'm going to go over this one after the other. So now from trend line liquidity, let's use this small space right here. So trend line liquidity, let's say we have this coming, we are breaking structure to the upside, and then we can potentially look for maybe another block is here, and then a fair value gap is here. Let me mark the fair value gap with a red marker. Fair value gap. So what could potentially happen is we are going to actually, we are going to come back to fill this imbalance, so we can start trading lower, giving a trend, inducing trend, and the trend people to actually be taking. They will be selling from when price touch this resistance. This is trend line resistance and support. So when a price touch this resistance right here, we'll be expecting price to go back down, and then we came into our origin. But this is the trend now. We came into our origin. This will serve as liquidity. Liquidity will mark with dollar sign or euro sign or any sign you want to use, but I mark one personally with dollar sign. So price is actually going to clear this liquidity, stop the people that are buying here, because they are buying early. And then price is actually going to come to our zone. Price is going to come to our zone. People that are selling are still in the market because they entered there, they are making profit, and then price will actually come back and stop them out. This is a stop hunt. I will still make a video on liquidity on its own as a different topic. So we start pushing higher and clear, because this liquidity situated that we have a lot of people trying to buy here and sell here. Smart money, which is people who are owning all these big institutional banks, are actually going to want to trade into all these stop losses. So we will clear these people that are buying here and then tap into our order block, filling the fair value gap right here and push up to the upside, creating a new break of structure. So that is trend line liquidity. And for support and resistance, let's use the opposite to do it. So we're going to go with we've done trend line liquidity. We're going to go to support and resistance liquidity. So support and resistance liquidity. So we're going to start with this. So we're going to use a sell scenario. We're moving lower. We're moving lower. So we're moving lower. We're moving lower. So now we have an order block here. We have another block right here. Another block is here. And then we have, let's use the green marker in this case. We have fair value gap here. Fair value gap. There's a gap here which has not been filled. The price now is ranging right here in this box. Price is ranging. Price hasn't gone anywhere. And then we have support right here, and we have resistance right there. So market is just in this range. What we actually want to see is, okay, let me just mark it like this, because we're in a sell scenario. We're expecting price to take out the resistance first. This resistance here, this is resistance here. We're expecting price to take out the resistance here, giving us liquidity for people that want to sell the market early. So we trade up into this fair value gap to fill it and tap into our order block and start trading downwards and clear the buyers that also bought here, because the buyers that bought here at this point, they will be in profits around here, and where they are taking their profits is somewhere maybe above this high, because they are thinking we are going to target this high. Don't know we are going to enter into an order block. That's why they trade blindly. Don't trade like 99%. Don't trade like 99% of people. 99% of people will always fail. They will fail. Only 1% of people make it in this trading space, and I don't need any other person that are not interested in learning forex or putting in the hard work to come and just say, oh, I'm lazy today, I'm not like trading today, or I trade support and resistance. Those things will give you a hard time in the long run. So that's why I trade smart money concepts and all of that. So we tap into this other block and clear the liquidity, which is also down here. So you can put your take profit here, because you know that price is actually going to clear this liquidity here and continue to trade downward, giving us break of structure to downside. Say we have the break of structure here. So we have the break of structure here. So what we had to validate this other block right here, this other block right here, what we have to use to validate it is, we had another block, we have a break of structure, we have imbalance, which price is going to come to fill, which price later fill, you can see. We Price later filled it, came to our zone and reacted beautifully to clear the liquidity. So now we're going to go to inducement, and after this I'll show you the exact structure I look out for in the market most times. So inducement, liquidity, we've done support and resistance. Now inducement. Smart money concept is not a perfect strategy, but because most people that just come into it will be induced into buying and selling from the wrong places. So now we have things like this here. Okay, let me use the green marker over here. Okay, we are moving higher. Now what can we see here? Let's say we have another block here because it broke a structure. We have imbalance here, that is FVG, fair value gap, right here. Price it hasn't come to fill in this FVG, and there is an unmitigated other block here. Unmitigated means price has not come to this other block and react from it. So we have another other block above this other block because it broke a structure too, and heck, there can be an FVG here. So now the question you ask yourself is, which other block should I take from now? We don't know yet because we don't follow the market and this. But first, we want to verify if this first order block here or this second order block here will be 2, will be 1. So it's going to hold. We talked about liquidity. So now what you can see here is price might come down like this. There's no liquidity. There's no liquidity for us to sweep, and we have an unmitigated FVG here, fair value gap. The price might likely come to fill in, tap into this origin and come back. But now, that is in this scenario I just showed, that is to show you that price might come back here and react. So now, if we have something like this, and then price came here with our FVG still intact, FVG still intact, sorry, let me draw it a little bit better. With our FVG still intact and price was ranging and then came back here, we can expect price to move up. There's something called confirmation entry, which I'm going to teach in my next in one of my videos, and I'm going to teach in this channel, so you guys should still subscribe and like this video. So price might likely to push out from here because of liquidity here. Now if there's no liquidity above, what we can expect price to do is people, smart money traders such as yourself, we want to take a buy from here because they have OB and then they have FVG here. So what they will think, oh, price is coming down to their origin, their profit, boom, price came down and tap into the right origin and move up to give us a new break of structure. Why is that? Let's come over to this place. The reason why that happened is because if price comes here, what has it formed? Double bottom. That is indicating a support which turns to liquidity, validating this other block right here. Price might react from it, fake some people, and then won't hit full TP. It has not given us a break of structure yet. It will come down here with the FVG still intact and give us a new break of structure. So that's just inducement. You have to watch out for it and wait for confirmation. Either maybe if price comes to your zone, your other block, you can see a big green candle, but that's not all you have to validate if the other block is going to hold. That's why I say you guys should subscribe. I'm going to make a separate video on how to avoid inducement and the rest. So in conclusion, with this strategy, I know the strategy, the video is long, for it's for only serious people. In conclusion, this is what I look for in the market. If I'm in a bullish scenario, I look for this. This is just my structure here. If you see this in the market, don't hesitate to take a trade. We have the break of structure here. We're looking to take out this high here. We're expecting price come back up, clear it. We have liquidity here because we have support. We had one touch, two touch, three touches. So this has found liquidity. We should leave at dollar sign. And price come back, give us a new bit of structure to the upside. Now for a bearish scenario here, so we might have something like this. Hasn't given us a bit of structure here, so we're expecting this low to be taken out. We have an order block here. We have FVG here, imbalance. Price to come back. We have one touch, two touch, three touches, giving us a resistance. Come back, tap into it. What do we have here? We have support, which price is also going to come back there. So here is liquidity. So this is what I just look for in the chart. This is what I look for in the chart. Nothing else, nothing more. So when you see this, don't hesitate to take your trade. With that said, I'm going to end this video. Peace.